Hey,
Welcome,
look,
welcome everybody. Sid, how are you doing?
I'm doing great. How about you?
I am doing well. Guys, we're going to give it just a couple minutes to get started here. We're also going to test out a few things for those of you who are early in the webinar. So if you can just let us know where you are dialing in from and throw that in the chat, assuming you have chat, so we can either see if we can see it or our colleague Christine can see it. Let's see here. Sid, are you able to see it?
Not on my side. I think we can leverage the Q&A and
Ooh,
yeah.
there we
All right,
go. There
perfect.
we go. Okay, yeah, leverage the
Thank you.
Q&A. Georgia, Michigan. Nice. Ohio. I love it.
Well, I'm joining just outside the DC area in Fairfax, Virginia. Oh, look, I assume that you're in Atlanta.
I am in Atlanta. Beth, great to see you on your love having you here.
Hey, Beth.
Give it another couple minutes. We are going to use clearly the Q&A. And thank you, Sid, for helping us figure that out. That will be our opportunity to engage with one another, have conversations. When we ask questions, you will see we'll be asking one here soon. Drop it in the Q&A. And that's kind of how we'll use effectively our chat situation. All right. Started about three after. Sid, I know you're in the DC area. It is 84 and sunny today here in Atlanta.
Yeah, that's because we sponsored the weather in Atlanta today. You're welcome.
Bet you
I'm
did.
sure at least a couple of folks on the call have heard that joke before. I will say that it is characteristically muggy out here. The post cherry blossom bloom, enter into swamp mode. DC-ness is definitely starting to come in. But at least cooler nights still.
I love it. I love it. I love it. Yeah, my son's up there in DC, so he's telling me that he misses the Atlanta weather at this time of year, except for the pollen.
Yes. Oh, the pollen will be coming here as well.
All right, 60 seconds, folks. We're going to get started in 60 seconds. We want to respect your time and we will get you out of here on time too. There is a lot of information that we will be sharing today. And I will go on record right off the gate saying that, it is very difficult. We don't know everything as it relates to AI. We do both have a lot of experience here, and I think that's going to come out in today's call. But this is one of this is the fastest changing market that I have ever seen in my career, and I have been doing this for 25 years. So it is incredible how quickly it's changing. It's incredible the use cases that are emerging. So a lot of that discussion for today.
It's funny how in school, as both of us are nerds here, we can talk about it for a second. You think about all these black box models and like neural nets, and all of a sudden that's what's being applied with great processing power. And voila, we have AI. Same math, faster power, and now we got everything.
Absolutely. Absolutely. All right. Let's get it moving. We are going to do introductions quickly in just a moment. This is the purpose of this discussion today is to be a primer, or at least an early view of how is AI going to transform financial wellness programs at organizations and just financial well-being in general for people. So I have been just really had excited about the opportunity to team up with Sid on this because I just think very highly of him and how he thinks through problems. So what we'll do first is just do some quick introductions. So Sid, why don't you tell them a little bit about yourself, your organization, and then I'll do the same.
Yeah, sure thing. Look, Hey everyone, good to see you here. Thanks for taking time with us. Sid Pila, I'm the founder and CEO of Sunny Day Fund. Sunny Day Fund powers workplace emergency savings and automates everything from the account opening, employer contributions, into not just emergency savings, but as well as other things like first-time home buying savings accounts. And what we do best is basically embed and integrate into existing workflows that you have to increase participation. I am very obsessed with this space really out of my own personal experience. I got my PhD in systems engineering, where I focused on how we build systems driven by behavioral economic principles, and excited to apply a lot of that and put on some of that nerdy hat today as well.
Awesome, awesome. Sunny Day Fun is phenomenal. So, my name is Alok Deshpande. I am the CEO of SmartPath. SmartPath is a financial education and coaching company. So, we work with lots of organizations across the country where there's classes every single day on personal finance, as well as a ton of content, and then one-on-one coaching and advising. In addition, you will hear a bit today that we have just launched an AI financial advisor because we believe that this is game changing in the space and will be the most helpful to people. That advisor is called Frank. So if you hear me say the word Frank, if your name is Frank, I am not necessarily talking about you unless it applies to you. But otherwise, it is the name is Frank. And so we'll share a bit about that as we go, but it is an AI financial advisor. Now, couple of ground rules for today. This discussion is for you. And I think the best way to illustrate that is that you can ask questions early, often, and always in the Q&A section. And I guarantee that if you have a question or you have a perspective, half the people on this webinar have the exact same question. So do not be afraid. I want you to drop it in there. And if we don't know the answer, we'll say we don't know the answer, and we can kind of figure out how we go from there. Secondly, we will try to be incredibly timely. So we're going to work through some information, but we're going to try to be incredibly timely. And then secondly, and sorry, lastly, is that we're going to ask questions to you. And I am okay. I've teach a lot of classes in personal finance over the years. I am completely okay with uncomfortable silence. And so there are going to be times where it's going to be quiet because we are waiting for you to chime in. There is a bastion of experience here. Every single one of you have engaged with AI in some way, shape, or form in the last 12 months. And everybody's got different perspectives, different learnings, different understandings, and we want to be able to tease that out for the entire group. So those are the ground rules for today. What I'm going to do is start that with the following. I'm going to give us all 60 seconds. I'm setting my calendar or my little timer here. And I would love to know, you can either be one word answer or you can go more elaborate. Do you think that AI is going to improve or worsen the financial health of employees? Is it going to get better or worse? And drop that in the Q&A. And Sid, I'm going to create this uncomfortable silence and start it for 60 seconds now. Is this going to get better or is it going to get worse? Okay, we got one vote for improve. Mm, we got about 30 seconds left. We've got some optimists. Oh, I love the hedging. It's going to do both. Yeah, yeah, Kevin. Yep, depends on the framing. Hmm. What is it going to do? Kenyon, great thought. All right, we are right at 60 seconds. So today we should walk out of here. I don't have a great answer to this, yes or no. I think what you're going to see in today's discussion is that we're going to tackle both sides of this equation. Like there's a lot it can do to improve. There's a lot it's going to do to make things more challenging. But before we go any further, I want to turn it over to Sid to just talk through the landscape. Like, what does financial wellness look like today in organizations? So, Sid, I'm going to move us to the next slide and let you take it away.
Yeah, absolutely. I'm sure that every single day you come across some statistic that says 37% of America can't handle a $400 unexpected expense. 70% of folks are uncomfortable, of Gen Z is uncomfortable with the concept of retirement or even saving or the amount of emergency savings that they have on hand. So there's a lot of stats that are out there. And from what we are seeing, as well as what employers are saying, there's a lot of different pain points about what employees need to do that are currently being addressed in one way or another, right? So things like budgeting. There's a lot of calculators, budgeting apps that are out there for sure. Emergency savings, as I just noted. Student loan debt is a really big one, especially in professional services. And we're going to talk about the hourly versus salaried focus in a second. Debt is a really predominant consumer side characteristic of the economy right now. So that's both credit card debt, which has toppled $1.2 trillion, but also more increasingly medical debt and how we go about and addressing that. The concept of retirement, not just in terms of having enough money while there, while on the way to retirement, but also making sure that once you are a retired individual, you have a predictable cash flow is another big thing that employees are thinking about today as well. And obviously, this being National Financial Literacy Month, or as I like to think about it, National Financial Capability Month, this is something that always is top of mind, and that's why employers continue to invest on the financial education side. Now, the type of solutions that exist also, because there's such a vast number of use cases around the idea of money, the type of solutions that exist are also extremely fragmented, right? So, you want a budgeting app, here's a calculator. And by the way, this calculator underneath your EAP is going to be different than the calculator underneath your healthcare platform that's different from your calculator that's underneath your retirement platform, right? You have, for emergency savings, you may be pointing to a bank or a credit union partner and hoping that people do it themselves, which often means it doesn't get done. It's same thing with student loan repayment benefits. We are addressing each one of these types of pain points almost individualistically rather than thinking about, if an employee is getting onboarded, if they're coming through, like what are the things that they're facing and how can we meet them where they are in their experience?
And what's interesting here, Sid, I think you're spot on, is that there's this whole set of point solutions. And I point solutions have also said, oh, well, if I offer this, let's take a student loan repayment. What if I also offered a budgeting app and coaching? So what's been really challenging, I've found, for HR and benefits leaders is that almost everyone wants to be the front door. And
Hmm.
if you've ever seen a house with 10 front doors, it's not attractive. And so what ends up happening is everybody's trying to be the front door because they're saying, oh, well, the customer had asked, I want some support with this. Maybe more people need support with that. And it becomes a highly, highly fragmented market.
Yeah, absolutely. And I think that we need to step back for a second and try to think about, first of all, are these individual pain points not interrelated? They often are. And so if we are addressing them individually, through multiple different front doors, as you said, there's, there's a lot of paralysis that happens on the employee end.
I think that's right. I think that's right. And one of the things we've seen over the years, guys, if you remember, for many of you who've been in this space for a while, in 2015, so over 10 years ago, Mercer actually tried to create kind of a suite of these services. I forgot the name of it, but they basically tried to put a bunch of these vendors together into a more like what I thought was a great idea, and it looked really good on a slide, but it was very, very challenging to implement. They ended up ultimately sunsetting it because when the other problem we would deal with in addition to having multiple front doors is people don't always behave linearly with money. I need to deal with this. I need to deal with that. I need to deal with this. And let me just kind of go through these in order as if I was my own financial coach. That's just not realistic for most people. They're just playing whack-a-mole for the most part and trying to figure out which mole is actually sitting up to that so they're supposed to whack. So I think the the proliferation of support has been inspiring. How people use it has been a bit challenging.
So here's something that is working today, right, with what employers are doing. I think, of course, there's a lot of positive intent. I think no matter which survey you're looking at, of course, employees are saying that top of mind for them is financial wellness, financial well-being of, at their personal level, at the household level. And it is very clear that employers more broadly are moving towards doing something to address it. What that something is, we'll get to in a second. At the end of the day, those anytime an employee benefit is provided, dollar for dollar versus compensation, we do know that a benefit and a well-structured employee benefit acts as a money multiplier, right? And you had, whether it's like a covariant analysis, or whether it's comparing and contrasting just different types of bonuses, we know that employees do like getting quote unquote a better deal through the benefit world. And of course, a lot of culture building is built into benefits as well. So creating a culture of support and belonging does start with making sure that people are able to see the different benefits. Now, what's not working is exactly what we just talked about, which is that it's a very fragmented experience. And as a result of that fragmented experience, it's a very low engagement. So I know, look, I've talked several times about we often run across employers that say, yes, we know that employees are our employees specifically have rated financial well-being being the top there on our the latest survey that we did. And as a result of that, we rolled out a financial education program that is through our record keeper that is buried underneath five different tabs and that no one's going to be able to get to. And so there's a perception that that's being checked, but unfortunately, because of the fragmented nature, the actual utilization of that experience, how good it may be, ends up being very low. It also thus ends up not feeling personalized because of what you just said earlier, which is that money is effectively an interconnected problem. If it's a health related issue, is it, am I thinking about how much money do I have, or am I thinking about exactly what dollar amount that exists in my HSA in case I need to go to an urgent care? It's all about the financial confidence I have right here and now. So at the end of the day, we're relying tremendously on individuals to try to figure out what to do next for themselves. And I for one think agency is a really good thing, but agency really needs to be provided with the right set of tools, not just a, Aldous Huxleyan level of overload of information.
I think you're spot on. And one of the attendees mentioned, another issue is employees don't want employer to share personal data, but then employees don't want to personalize the site. So you've got a little bit of this, like, the tail and the dog, like which one goes first, or the chicken or the egg, which one goes first. Um, so I think that's a phenomenal point. Now, before I leave here, a couple of things I want to add, and then I want to come to you guys. I'm about to come to the audience to say what else do we need to make sure that we discuss or that we may have missed, or any questions you have as it relates to the current state of affairs for financial wellness programs. I want to hit really hard on this engagement point because you and I have definitely had a lot of discussions about this. In From what I've seen, from my experience, if you pay people to do something, you will get engagement. I recall a large bank rolling out a financial wellness program where if you opened up an emergency savings account, they would put $1,000 into that account. I will guarantee everybody in this call, you do that at your company, you're going to get a lot of engagement. The problem is that budgets don't actually work that way. Budgets don't really work that way. And so you end up kind of saying, well, we want to put the solutions in front of people, but they have to decide to come. And what are we going to do around communication? All of these things become a massive challenge to driving engagement. So I would encourage people, we've seen when you pay somebody to do something or you provide them what I would call is like better priced debt, you're going to get engagement in the 30% plus. If you don't provide those things or you don't pay them, you're probably going to be in the single digits to low double digits, and you're going to see that those are going to be high impact um, engagements, but you're still not going to see 70% of people taking advantage. Now,
I think the
question
point that
on
you
the,
just made,
yeah, go
uh,
ahead, Sid, and Yemi, but before you do, I'm going to turn it over to Sid. Yemi, question on point on agency. Go ahead and ask your question, and then go ahead, Sid, and we'll tackle it.
I think that Yemi might be referring to when I had mentioned agency or what the point
Okay.
of that was. I think just to clarify what I was saying there, Yemi, I appreciate that individuals have a sense of ownership to be able to drive their their own financial well-being forward and be able to choose the priorities that are necessary for themselves individually for their household. However, we make it very complicated for those folks to follow through on that by providing way too much information for them to analyze individually, navigate individually. That's the point that I was trying to make. So essentially, we want people to feel like they can do something, that they are well equipped, but then the thing that we're equipping them with actually needs to be somewhat sensible. Um, Now, and by the way, I look to the point that you were making earlier. There was just earlier a report that was put out by Berlin Glass Institute, and I think that it makes your that point perfectly. That employers are uniquely positioned to leverage how they're thinking about compensation and benefits uh, versus anything else that can possibly be derived in the consumer space, direct consumer space.
Awesome. All right, I'm going to pause for 1 second. Any other questions about the current landscape? I think Sid, you did a fantastic job just kind of letting us know where we stand today. Anything we missed or anything else you guys want to add? I'll give you about 15 seconds. Then we're going into AI. All right. Okay, I think that's a good one. Kevin's adding that, programs often fall short with implementation. Let's be real. There are programs out there that say they're going to do something in the sales process and don't actually execute it in the execution. Some of that may be on them, some on the employer, some on the employee, but that is a very real thing. So I appreciate you pointing that out. Awesome. We're going to keep it. And Yemi, you said you have a question. Oh, okay. Awesome. 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 All right. So now, kind of the core of what we wanted to talk today is about, how does this work?
Wait,
Yep.
Alok, excuse me. I think I'm gonna put Yemi on. I think she still has a question to ask.
Okay, go for it.
Yemi, you should be able to talk right now. Are you there? Okay, maybe she'll come back later.
Okay. All right. So now let's kind of get into like, all right, so how does this change in the world of AI? Kind of that's the core question here. And I think I'm going to kind of talk about how things are going to make money harder. And right now I'm kind of focused at the employee level. How are things going to be harder for that employee? And then what are some things that are going to make it easier? I have a very strong point of view, at least of where I think the future is going with this. And so I will make sure to kind of articulate that. That does not make it right. It just means it's my point of view given what I've seen. The first is making money harder. And I'm going to use like an example here to point these out. You guys can read what's on the screen. So I want you to think about retargeting today from a marketing standpoint. I'm focused on the hyper-targeted marketing point you see here. And retargeting, if you guys don't know what that is basically if you go visit a website, like let's say we're thinking about taking a cruise this summer, we go visit that website. I'm about to see this cruise or this cruise company on every single page on the internet I go to for who knows how long, but they are going to follow me around the web. That's effectively what retargeting is that they kind of see where you're going and then they're going to target you. And the way that retargeting is done today is kind of A leads to B. You went to this website, therefore you're going to get ads on this company. We just assume that since you went to look for a cruise, Alok, you're going to want to see a whole lot more cruises. So great. And we figure if we show you this impression enough times, good things will happen in terms of you'll convert and actually buy a cruise, or some percentage of you will. With AI, that is going to change drastically. So instead of a grouping type of mechanism, which we just talked about, this is going to become uber personalized, where not only do I now have the data that says, oh, you went to the website, but I also have the data that says you were chatting about or you were liking a lot of people's cruise pictures on Facebook. And I have the data that you were chatting about it on Instagram. And I have the data that you were searching here. So I actually have a better understanding of intent for you personally. Then I also know how you engage. I have no idea whether you've clicked. I know if you clicked on banner ads, maybe that's how you engage. Maybe other ways you gauge is through chat. And then lastly, what I can do is I know that intent. I know that you've gone to look at cruises. You've kind of set yourself up for you're going on this cruise. Instead of me sending you a banner ad, I'm just going to comment on one of your posts if you've made a post. Or I'm going to be a lot more personalized. It's not even going to feel like it's AI. It's going to feel like a human eventually, where it's like, oh, someone, this person, like as our AI is called Frank, it's like this person just said, oh man, I had such a blast on the cruise to the Bahamas. It was great. So they're not even trying to sell you anything, but that's actually Royal Caribbean's AI telling you they had a blast on this cruise. Of course, they had a great time to help reinforce this, this idea that you want to go on the cruise. So that is just one example of how powerful AI is going to be for brands to identify intent and to identify the opportunity to drive higher conversions of sales. Now, there is a great question that just came in, unless yes, your comment is correct. Is that lying? That person, that AI may have enjoyed the cruise. Maybe they put a name against it. Like, is it lying? Is it misleading? Um, yes. It is, but in many ways today, marketing kind of walks on that gray area. So I think you're spot on, but it walks on that gray area. Thoughts, Sid, on, I think this question's a good one as we get really hyper targeted. Is it lying? Is it misleading? Kind of what are the boundary conditions here?
Yeah, great question. As you know, I've been getting myself volunteered onto a bunch of different policy topics, and what you just asked, what this individual is talking about, is in the policy space under the world of UDAP, which is focused on deceptive marketing, essentially, and so your terms and conditions, your privacy policy, all of it can say something, but even if what is written on paper is different than what how your behavior is happening, then like they're in violation. But the problem is the terms and conditions are evolving so quickly, and most consumers are accepting. I know that I feel like I don't have a choice but to go on. I will confess that I myself have not verified myself on LinkedIn that because I personally just don't want biometrics to be shared. That's a personal choice. But this is where, for me, that's a risk vector that I'm just protecting for myself. I think that we are entering a world where it's not about whether someone is lying or not, it's whether they're seen as trustworthy or not. It's less
Mhm.
about fact or fiction and more about is this a person that I feel like is a part of my community or not. Notice that it's more about a feeling because that's literally how the cognition in our brains are starting to shift. Less logos and more everything else.
Right, that's fantastic, and I think Kevin makes a good point here too. Exploitation versus nurturing, two kinds of manipulation with different objectives and outcomes. So this is coming, and I think the other thing to note here, um, I think the other thing to have a to kind of that stands out to me here is that even if it was lying and manipulation and misleading, and I think you're going to hear a lot of those things, maybe at some point there'll be clash action, but for individuals, there's going to be limited recourse in these situations. And so
Yeah.
you're looking at like, okay, well, it's going to cost me more than the cruise to battle this to begin with.
Right.
Now, on the other side, and then Yemi, we'll come back to you for the question here in just a moment. I see you. What is going to be easier? So I want to continue with this example. So now I'm getting all this stuff that's basically like, is this real? Is it not real? Like they've understood intent. They're thinking about, I kind of want to take this cruise, so I'm probably not that hard of prey. And so I'm out there looking at this. You will soon have AI agents that you will purchase or you will have that will allow that will actually help figure out which of these are manipulative, which of these are right or wrong, that are working for you. You will have agents in the personal finance space. That's what we're doing with Frank. You'll have agents in the ad blocking space. Today, ad blockers are pretty vanilla, but at the end of the day, you'll have ones that say, you know what, I'm going to let certain things pass through. Now, there's a danger here. Typically, these are going to be based on your wants. And that's where I worry about it as it relates to personal finance, because most people have a lot of wants that they may not be able to afford. And so thinking about the settings around these agents is going to be quite interesting for the organizations that produce them. Some of these should be wants. Some of these should be needs that says, hey, look, don't show me ads of things I can't afford. I don't want that. I don't want that smoke, if you will, to have to tell myself and to have the discipline to say, okay, well, I'm not going to buy it now. So be real mindful of the fact that as these agents come out and they decide and they help you decide and they help you filter effectively what's going on, um, you'll have agency, of course, in setting them up. But at the same time, they could be dangerous if you kind of leave them at their will. So there's a whole lot of exploration happening in this space now. Now, let me ask Sid, any thoughts there? And then Yemi, let's take your question.
I I think I'll cover it when I'm talking about hourly workers here soon.
Awesome. Yemi?
Hi, yes, thanks for taking the question. Apologies for
Sure.
earlier. I couldn't get the mic to work. So just connecting a couple of things and then a question, right? We talked about agency with the right set of tools. What got me thinking there is, okay, you know, folks I think do have agency, right? I know we're thinking of them as employees, but they're really just societal actors, right? So they do have agency to select the tools they have, and they're selecting different tools, which could kind of explain the lower levels of engagement. So could it just be that, and tying in the trust issue that we just spoke to, right? Could it be that folks are engaging, but they're not engaging within the employer's forum or preferred forum, that they're using a lot of these tools, whether it's ChatGPT, on their own, right? And so that is probably, corroding a little bit of um, the usage there. And then just another point quickly about the incentives that I've always kind of wrestled with myself and spoken to quite a few folks about this. But wouldn't it, if the outcome is to improve the financial health of the employee, couldn't we just, instead of incentivizing to use the tools, which will always work, we could just give the employee the $1,000?
Well, I think those are great questions. I'll tackle a couple of them, at least from my perspectives, Yemi, and then Sid, I would love to hear your thoughts. I think on the third one, you could, I mean, from a P&L perspective, you could give everybody $1,000 raise. So I think that that's more of a financial decision that's kind of unrelated to financial health. I wish the minimum wage was higher. That's me personally. I think that people need to have a living wage. That's me personally. I think organizations have to decide kind of where that fits in their priorities, and so be it. I think on the other one, though, I want to tackle is that I think you make a really good point that as an employer who is implementing financial wellness programs that are a string of point solutions, it is quite possible that the point solution, we'll use the student loan example that was mentioned earlier, that the point solution that you've provided is actually a great solution. The reason people aren't using it or you're not getting the usage you think is folks have solved that problem elsewhere. It's not really a pain point. The fact that someone has a student have student loans does not mean that student loans are a pain point. It just means they have student loans. And so what the when in a in an, and I would blame this on myself here in a little bit in the sales discussions, you often hear some numbers that can sound eye-popping, but in reality, what's happening with your population is they may be solving this elsewhere. So I couldn't agree with you more, Yemi. Sid?
Yeah, I think that on the question about individual solving for different use cases on ChatGPT or Claude um, or nowadays there's so many different things that are under other umbrellas like Copilot, for example. And I think are people doing it on their own? Yes, but doing what exactly? I think where, and if we actually maybe go to the next slide, this probably
Sure.
lends well to some of the conversation that, like on the hourly worker end, and I'll get to the $1,000 piece as well. So, like, let me, for example, like paint a portrait of perhaps someone that may be on the front line making between 35 to 75K, 70K, and so, just for reference, at an individual level. 35K is roughly 200% federal poverty level, but at a household level, certainly the wage range you see there could be inside of that too. So there's a higher tendency of those individuals living paycheck to paycheck, emergency savings and credit card debt being an issue, volatility, and I don't just mean on the cash flow or cash outflow side, but also income and getting the hours, if you will. And at the end of the day, they're not, quote unquote, worth the time of a financial advisor whose whole job is focused on assets under management. That's just how it works. Now, yeah, in this case, if we go to the next slide, where AI can help, and from an individual direct-to-consumer perspective, is general navigation. So I think that what ChatGPT has become is the next version of Google, which is capturing the intent of me searching for something. So, hey, look, I'm in this situation. Can you help me figure out how to navigate existing public benefits? Can you help me figure out how to navigate, this situation that I have going on with an overdraft? Can you help me figure out how to set different goals for myself because this is where I am? These are all actual use cases that, as I've spoken with individuals and having done research in this space, and I'm sure Yemi you have as well. These are the types of things that come up from the private segment. But on the employer side, a subset of these items might make sense to be answered, especially if the employer having leveraged their, whether it's their buying power, their tax power, or the simple utility function of additional community that they're creating, the culture factor. Those three reasons are the reasons that the employer would want to have the $1,000 be delivered. Like in each one of those cases, the $1,000 as it's received by the individual ends up being feeling like it's worth more than the $1,000 as if it were just cash or direct deposit compensation. So on the tax side, for example, there's literally a tax benefit. On the culture factor, for example, if I'm receiving $1,000 and as a part of a community versus I'm receiving $1,000 individually for the work that I'm doing and that's it, that there's a different there's a higher scaling factor on the latter, as behavioral research has shown. Now, but this, what Alok was talking about earlier, if we can click ahead, also starts coming into the employer space. And this is something I really want you all to be thinking about because this is happening today. There's often things that are unfortunately exploiting workers who are living paycheck to paycheck that are saying, let me use, I think Kenyon was talking about differential pricing. Let me leverage differential pricing to let you, figure out how to replace that fridge that just broke down as we enter summer, right? Like that's a real concern. This is something where I have food spoilage. Which I don't want to have. I need to replace that refrigerator. It is a necessity of life, especially during the summer and especially in the DC area, as established earlier. Now, if I'm trying to, like there now I have an employee benefit that is essentially saying like, here's a fridge, this is how much it costs, but you don't need to worry about it. It's just going to be, 20 payments of $100 each. Well, you never saw what the actual price was. It's effectively an embedded buy now, pay later program, but enabled by how AI can target you at a point of need that is very painful, but match it at a highly differential price that you otherwise, you wouldn't want to pay. So I think that this is one of those areas that employers have a responsibility to navigate thoroughly, where we're again equipping the individual with the right resources, including compensation, to go and make sure they're getting they're solving the problem in front of them effectively. The
And
last
I,
thing I'll note here is public benefits navigation, because this is something, especially in certain sectors, like if you're in hospitality, if you're in healthcare, if you're in manufacturing, there's a strong likelihood that at least one person in the household, if not the worker themselves, is receiving some form of public benefits, and especially with the most recent Medicaid requirements. So this is a great arena for financial, for AI-enabled financial navigation, where you're able to, as an employer, preserve the quality of the recommendations and not have it become yet another ad vector.
I want to ask a question quickly, Sid, on one point that you made, that in an environment that you talked about employer responsibility, and that's who we're talking about here today. Employer, how do you feel that responsibility? What do you believe is the responsibility, especially in a deregulatory environment, an environment where I'm not sure we're going to have AI regulation of any significance in the near term.
Yeah. I think that there's three parts to this. The first is what was mentioned earlier, I think also by Kenyon, which is we really want to level the playing field on access to different AI capabilities. It should not matter this day and age, in the wealthiest country in the world, that someone that's making $36,000 with now AI can't have the same quality of advice, same quality of navigation as someone that's making 10 times as much, right? The certified nursing assistant versus the doctor, if you will. So I think the inclusion is a big part of it. Equity is a big part of it. The second aspect of that is, and just to be clear, I think that that's the employer choosing a culture as well, right? The second part of it is the employer is providing a lot of benefits where they are have fiduciary obligation and fiduciary obligations. If you're looking at it from a litigation standpoint, you all of a sudden have lost the argument of, oh, I didn't know along the way, which is no longer the case. And I think that this is one of those things where employers do need to think carefully about not just what they're equipping their employees with, but making sure that it's first and foremost taking care of the employees' individual and household financial futures. And I think that the last bit on the employer responsibility lies with their own corporate responsibility. It's profitability. And, I feel like that's just one thing that we often forget when we dive into our space of financial wellness, right? Look, you're an HBS grad. You know the value driver trees, how we need to think about profitability. We know exactly which levers we're pulling in an organization as we are thinking about improving profitability, whether it's not just your classic retention, productivity, and everything else. It's about risk mitigation. It's about making sure that you have a higher acceptance rate when you're offering a role. It's when you're offering, you're advertising a role on Instagram, you have a higher click-through rate, right? Like those types of things do drive back to the ultimate responsibility that you have on profitability. So having AI-driven financial wellness, in my opinion, does relate directly back to that core responsibility to the corporation.
Love it. And last thing for you on what are things that aren't going to necessarily change necessarily, or AI may
Yeah,
not face.
not in the immediate future, at least. Like wage levels, macroeconomic factors, and volatilities, and wars, I guess, uh, from yesterday. Yeah, and I think that healthcare is another big one because this is more so just this. The momentum is unfortunately against both the employer and employee. As much as they can seek to get claims data to be able to fight the battle, all we can do to drive down large cost claims is make sure that employees are feeling financially confident to have preventative care. Like and there's tons of peer-reviewed journal paper research in that space. But trying to use AI to fix those things is going to be extremely hard to do in the near term.
I'm going to come back to the healthcare one because I got some thoughts on that, but we will
Yeah,
come
of
back to it.
course.
So let me tackle, thank you, Sid. Let me tackle the other side of employees. And look, guys, we made kind of a general break between hourly and salaried. Obviously, people can blend. It's a Venn diagram here. People can blend in either side. For the folks that are salaried professionals, here's what I think is going to be the reality. First off, when I think of this group, not just the salary, but there's more complex financial decisions. There's aging parents. You've got more products that you're dealing with. You've got more accounts, generally speaking, especially if you've changed jobs. So the complexity of your finances tends to increase exponentially. When you add kids to that, well, yeah, it just continues to increase. And so these are all things that this population deals with. So their financial stress may not be I'm check to check, although there's a significant portion of people who, no matter what their finances show, feel they're check to check. So that stress level is there. And that's something that Sid is working to remedy. What are the situations where AI is going to help? Well, I ultimately think, and I'll just say it, I think a robot will eventually do people's personal finances. I think they will do them for you. Frank, we're building one of these robots. It's been incredibly interesting to watch what it's capable of doing. And specifically, I'll give you an example on the AI side that Sid mentioned on healthcare expenses. If you're self-insured, um, even if you're fully insured, you have a person who let's call them Sid. And Sid is generally healthy. And Sid, if you look at last year's claims, it's almost zero, right? And Sid has a $3,000 deductible plan, but Sid needs to get a CT scan for some reason. Well, typically what Sid should be doing is thinking, okay, I'm probably not going to hit my deductible this year. So me going and even anything going to the deductible isn't necessarily a benefit. There is a place that I can get a scan done here for $250 instead of $1,500. That's a situation where the robot should be able to identify that for Sid and be able to point Sid in the right direction to say, you said you needed a CT scan and you wanted the lowest cost out of pocket for you. Here are your options. Option A, go to the scan place. Option B, go through wherever your primary care physician told you to go, which may end up costing you $1,500 out of your deductible. It gives you a benefit of going against your deductible, but you might not use that the rest of the year. And then option C, something else. And so it should be able to provide that type of analysis. And to Sid's point, it should be able to provide that to anybody, whether you make $20 an hour or you make $200,000 a year. That's coming. And so I do think that you will have better decisioning for the individual as we get deeper into AI on the positive side. Now, where is this going to hurt? And I always find that the pain in these situations, I was working during the last like major technological revolution, which I'd kind of call the end of the 90s into the early 2000s, kind of the age of the internet. And this is probably the biggest one I've seen since then. And what I find is where a lot of the pain is going to happen is between now and then. And what I mean by that is between now, when we're kind of at the early phases of this, likely brands, companies that are selling financial products are going to move far faster than consumers. And when we get to a point where the ability for AI decisioning is ubiquitous, in other words, everybody's got a robot, right? If you go back to at least my age, there was the Jetsons, there was a robot, you just asked it to do whatever. And so I think where this is going to hurt is in that space and gap, which may be the next 3, 5, 7, 10 years, where lots of different products are being put in front of people. There's lots of this, what we talked about earlier with the cruise. There's lots of financial marketing. All of these things are going to be happening at a very fast clip, and folks are going to be overloaded and potentially make decisions that are not in their best interest. So that's what worries me most about AI is the speed at which brands will move relative to consumers. And then similar to Sid, like what is this not going to control for? Well, market cycles, economic cycles, tax policy is a big one. AI can learn tax policy and it actually can help you very well with identifying places to save money on your taxes, but it can't change the policy itself. And I saw that there was a comment earlier which said, you know, we first need people to in Congress to understand what AI is and how to operate before we can regulate. And I worry, at least from my perspective, that's too late. If we're waiting for Congress people to actually understand AI and what it's capable of and how it works, even from a technical standpoint or even from a market standpoint, it's almost too late before we get there. It's really understanding, like identifying the experts in the field and those who are doing the research in the field and understanding kind of what are some basic things we can put in place. An example of that would be if AI is being used in any sort of communication with humans, it needs to identify itself as AI, right? That's a very basic requirement. Doesn't hurt anybody. It's like you just, because ideally for some brands with the cruise example, I wouldn't want to identify myself as AI. I want to seem like I'm in the conversation so that you'll buy the cruise. And so I think that there are some places here. Now, let me
And
tackle this
look
question.
on that
Yeah,
on that
please.
point specifically that ties to the fiduciary responsibility question as well. I think that's something from an employer hat perspective, you're in a position to look out for, right? I think that ultimately you do want to be careful about what is it that you're recommending individually as an employer versus perhaps someone that is on the versus the robot. And on the healthcare side, for example, I do think that like that is an example in my mind where there's an increased probability of Sid seeking and actually going through with the CT scan because you've just now leveraged the robot to tell me it doesn't matter if they're on the deductible side, it's just a lower priced variation of the same exact service. If you're giving me something that's $200 versus $350, even though the 350 is going towards something that's on my deductible side, the $200 means that I'm likelier to actually, go through with that doctor's prescription at the end of
Mm,
the day. It's called
mm.
cost-related non-adherence. It's a real big problem in the healthcare space.
And I think this other question, and you talked about this from a fiduciary standpoint, one of the things that I always struggle with is that at the employer level, I think Sid is spot on. The employee level, um, recourse is a very real thing, and the cost of recourse is a very real thing that is a deterrent, even if you're right. And that is where I always get concerned with people believing that, well, you know what? If they do something wrong, then I can always sue them or I can always get my recourse. Well, you can. It might cost you more than what you lost. And so in those scenarios, I always get concerned that the recourse is more expensive than the actual product. So in what situation does that apply? Again, I think these are all kind of on a spectrum. All right, we have just 10 minutes left, and I told you we are going to be timely today. So here's what I'm going to do. I'm going to give you guys just a couple of minutes, drop into the Q&A. You know, how should financial wellness programs evolve? Give it some thought. I'll give you 2 or 3 minutes. Then I'm going to ask Sid that question. I'm going to take a stab at that question. And we're going to try to be as practical as we can in the near term. Like there's a long-term view of this and what strategically you should do, but then there's also some near-term stuff. And then we got one last slide, and we're going to get you out of here. So I'll give everybody a minute. I'm going to set my timer for 60 seconds. Fun discussion, Sid.
Yeah, absolutely. Good questions too.
Yeah, yeah, great engagement from the group. How should prudential programs evolve in effectively in the age of AI?
Into a first edition Charizard, of course.
All right, as we're waiting for those answers, Sid, thoughts here, just at a high level. Just a couple things that might come to mind. What comes to mind?
I think that we're going to shift from what is it that my employees need to where do I have the leverage to, as an employer, to make sure employees are answering questions for themselves. I think that the choice architecture is going
Mm.
to change fundamentally as a result of AI. I think previously it's been much more reactive. Employers have been much more reactive to here's what my peers are doing, here's what my, these are all the different categories of benefits that exist. So they start doing things in the student loan space, maybe someone else in some other space. But now I think it's going to be shifting to my employees are asking me these questions. So here's what I'm going to do. At the times that I have their attention, I'm going to make sure that I am going to at least force them to answer that question for themselves so that they are immediately mapped to the right resource that can best help them in that situation. And I think that is going to be coming very, very soon.
I can't wait to see it. I think that's spot on. And I'll hit on a couple of ones that we're hearing from the group, which is, they need to evolve to become more holistic and inclusive. And I think employers have tried to do a good job of that. I give a round of applause there. At the same time, I think there's more opportunity, especially in the age of AI, and evolve in a way that you have measurable results. My sense is that that will occur. It will be interesting to see how this stuff is measured when you have agents as a part of the equation. So I think that applies. Kevin's point is a good one here on, first do no harm. I can't, I'm so glad you said that because I can't stress that enough that as an employer, there is a certain level of responsibility that you may feel to someone's financial health. However, there is a level of risk management that you should feel of doing no harm as it relates to someone's financial health. You want to be on the positive side of that equation. You can't change everybody, but you do want to be on the positive side of that equation as you think about the programs that you have in your organization.
Look,
And
if I can press on that a little bit,
please,
would doing nothing actually be doing harm in the new age?
I think in the short term, if you're asking me that question,
Yeah.
in the short term, doing nothing would be doing harm. In the long term, it may be that the way this evolves is that that financial health and wellness is actually driven outside of the employer because individuals have an agent doing it. I think this looks different long term than it does midterm. But in the midterm, this is where employers, I think, need to step in for a deregulated environment. They need to be educating their employees. You had talked about giving them the tools, helping them understand how to evaluate answers. Um, I think I saw a report recently where it's like for younger generations, they are learning more now through their conversations with Claude or ChatGPT as a percentage of their total consumption of learning than ever before, and it's continuing to increase. It's actually the largest portion of the pie now. So it is how people are like learning stuff. It's not even a tool to use to go do something. It's like the new book. It's it's the new test. All right, we got 5 minutes left, so I want to come here and give a little bit of thoughts on the now what. So I'm going to let Sid take this left half, which talks about kind of where we are today again, and then I'll take the right half, and then we'll close us out. Sid?
Yeah, absolutely. So, as we have shared, right now we're in this, and, from the beginning, we've been in this zone of these are a list of the things that I think I'm supposed to be doing, and let me make sure to check the box on those fragmented solutions. But unfortunately, that's not how people live, very simply put. There's a lot of interconnectivity, and we need to be thinking about how we interconnect that. I think of it as, three different layers. You have the infrastructure layer, where ultimately we're thinking about, like, does an individual have the ability to even, for example, even have a savings account? There's the decision layer, which is, do I, as an individual, do I have the right information in front of me? And then there's the data layer, which is enabling my decision based on what I'm able to even look at. And I think that what AI has done is, what is very problematic with today's situation, which is that data is so fragmented. Those decisions are thus very fragmented. And so for both the employer and employee, is going to shift to.
Yeah, integrated. Look, I think there is a world, and I'm going to go out there. I know Sid and I debated about this, and so we had some spirited conversation. I think there is a world where, as an employer, you can go out and get hundreds of different point solutions. You can make them micro point solutions where if you have 1,000 employees, it only really helps three of them, right? So think of it as even in the healthcare space. We've seen this with like diabetes management or whatever it may be. So you can get micro levels of solutions that you have negotiated better pricing on. Like you've done your job. I've negotiated better pricing and I've vetted the solution to know that it does no harm to Kevin's earlier point. And then let the robots navigate which ones are right for people. They're going to use them. They're going to ask them. They're going to say, Siri, in today's world, which of these, what of these do I need? And it's going to be loaded up with all of the cafeteria benefits that you have. So the old school cafeteria plan where you gave people some set of money and then they go and figure out how they want to allocate it. One of the challenges with that was there was always concern about, well, are people going to do this the right way that actually, or is it going to be more wants? Is it going to be needs? Are they going to understand what they're buying? So on and so forth. I think some of that is going to come down where they don't actually need to understand it fully. They need agents who do understand it fully. So they effectively have their own, think of it as like a family office or their own advisor that's going out and helping them make those selections. That world gets really exciting to me because then I think employers can do what they do well, which is leverage their scale. And if
Yeah.
they can do that for people, and they do that well today with credit and folks that are looking for credit, they do that well. They leverage their scale. They leverage the paycheck in that instance. When they can do that, I think you're going to see a lot of positive things come out of it. So I am quite positive and bullish on AI. I am just feel that we are in for some volatility and a rocky road along the way. Any parting thoughts, Sid, before we let people go?
And I think that that world is not too far away, Loki. I was just as I was telling you during the prep call, I was just thinking about how at a manufacturing client, that's exactly what they started going towards, right? I mean, they took a world where they made sure that infrastructure part, all the sets of solutions they leveraged their scale for, in our case, added the savings piece in. They streamlined the data layer and they made the decision as easy as possible for the individual by helping them like essentially navigate it very much more simply, right? So now I think that that's what you're going to start seeing more and more of, less giant benefit handbooks and more a single conversational tool or a single journey tool along the way. So that's going to be really interesting.
I love it. I love it. My one last parting thought for you guys is I would encourage you to take as many demos and opportunities to see what's coming in the financial wellness or health wellness, any type of wellness space, knowing what's out there and what people are building now, and then take them again 6 months from now, and then take them again 6 months from now. Knowing what that is going to make you a much better steward, whether you choose to use those tools or not. I think really understanding what people are building and how they're viewing this is probably the best thing you can do at this stage. Be the knowledge point around wellness programs and AI within your organization, and you'll find yourself in a really positive spot. So, with that, first off, thank you, Christine, for setting everything up. Thank you, Sid, for all of your thoughts and remarks and just your kind of deep knowledge in this area and just in personal finance and financial wellness in general. And most importantly, thank you to all you guys. Look, these things are always fun, and especially when we get the engagement that we got today. So I can't thank you enough. We will be signing off. Thanks, everybody.
Really appreciate y'all. Bye.